Happy Monday, everyone. Welcome to our Trading a Smaller Account. I'm Connie Hill, sitting in for Barb Armstrong this week, and happy to be here. You know, when you were looking at different stocks in this class, can you kind of get a feel for if you think the stock might make a big move or a small move? Now, none of us really can read the mind of a stock, but we're going to look at maybe some technical clues that might give us an idea if the stock is likely to take a big move or a smaller move, because that can help influence the type of trade that we decide to do with it. Well, I hope you follow me on X. I'm Connie Hill CS. We have the pleasure of having Kevin Horner in the chat here today. Welcome, Kevin. He can be followed at Kevin Horner CS, and we'll post educational content throughout the week as we see things we think are interesting. We will draw your attention to it. So it's free, it's easy. Feel free to tag along and follow us. All right. Let's do this. Let's go ahead and go through our disclosures, and I'll lay out our agenda. I've got quite a full morning packed for us here. Options carry a high level of risk and are not suitable for all investors. What we talk about today is intended for educational and informational purposes only. Don't consider it a recommendation. We'll be using the Paper Money software application. It's provided for educational purposes only. I think it's a great tool as you start practicing different strategies or want to learn different strategies. Do it in your paper account, right? That's where you can make mistakes, kind of maybe learn some things about the strategy before you're using it in your live account. For the sake of simplicity, when we're talking about trades, we don't talk about the commissions, but keep in mind, you should be aware of that. Past performance is no guarantee of future results. Now, Lawrence is saying something is very blue on your screen. I hope it's not my face that's very blue. That would be not a good sign. Let me know if you want me to try to fix something there, Lawrence. So we're going to take a quick look at the markets. We want to look at some of our existing trades in the account. And I have logged into the account Barb's using for this class. So we're going to be using those trades that you're already have been familiar with and maybe are already following along with. And then we're going to look at some new example trades. Jim says, nice Crocs trade. That's one we're going to take a look at. Yeah, Crocs was done Friday. We're out of it today. That is true. All right. In this class, we're working with what we're going to say is a smaller account. A smaller account to you might be different than $20,000, but that's what we're doing in this account. We have set some guidelines. We don't want any position to be bigger than $5,000. So if we stake a stock put, we don't want it to be that much of our account. Max trade risk, we want to limit to $400 to $500 per trade. That means we're going to focus on short-term and intermediate-term type trades, and we'll trade both bullish and bearish directions, okay? So types of bullish strategies would be a long stock, long calls, short puts, buy right covered calls, short put verticals, and long call verticals. And quite honestly, because the SPX is trending up so much, that is going to be the majority of the trades that we look at. If we look a little bearish on things, we'll look at long puts, long put verticals, and short call verticals. And then once in a while, when it seems appropriate, we'll look at an iron condor or we'll do a calendar type trade. So that's where the focus is going to be here. Concern here says, oh, Lawrence had to raise the brightness on your phone. Oh, if you're looking at this on a phone, that can be a little bit tricky, but glad to have you along. The laid back wants to know, just out of curiosity, and just because I don't have an X account, why don't all of you have other social media platform accounts if there is a reason that you all just use X? Great question. Oh, it looks like maybe Kevin is answering some of that question. I'm going to leave it up to Kevin there. He's responding. Basically, some of us are also on LinkedIn. Yes, it fell out of my mind for just a moment. Okay, we could be expanding into future venues, but right now we are in X. Okay, quick and easy to get a hold of us there. Next up, let's head over to the paper account. We've got the SPX up and making a nice bold move here today, up 1.28% so far. And I have a diagonal line drawn across the tops here. Looks like maybe it's going to try to break above that diagonal resistance there today. So far this morning, pretty strong move on the SPX. What about the Dow Jones? Dow Jones is looking pretty nice as well. In fact, if I had drawn a trend line here, I might draw something along the lines of this. Oops, stay there, line. There we go. Looks like maybe it's popping above its diagonal resistance there on the Dow. It has been pretty strong, up almost 1% right now. And NDX, the NASDAQ, has been weaker. It's been pulling back farther. So right now it looks like it is bouncing around that 28 level and around what's the, I believe this is going to be the 20 period moving, no, it's the 10 period moving average here, this blue line. This kind of little purplish reddish line, I believe that one is the 200-day moving average. Let me make sure. Nope, that one is the 30. Okay, so blue is the 10, this one is the 30, and this other is the 50. So we're just using those shorter term, intermediate term type moving averages. But it is having a nice bounce here today, isn't it? And the Russell 2000, which we don't work with a lot of Russell 2000 accounts or stocks in this class, but it is having a nice year. It's up 1.58%. Why do I say we don't use a lot of stocks here in the Russell 2000? One of the things that's really important for the stocks that we use in this class is using liquid stocks that have a lot of trading activity on the stock as well as on the options. And a lot of small cap stocks don't really fit that bill. And so we don't, I mean, once in a while we will use them, but not in terms of the lion's share of things. Let's see, CB wants to know, can we comment on the AMD long call vertical with earnings tomorrow? Is that one of our trades? I didn't notice AMD here. Let's see if we have a long vertical. I wonder if we're out of AMD because I did not notice it in the class account. But if you're looking for, say, something new on that, yeah, take in consideration when earnings would be. It looks like tomorrow before the market opens. So if anybody wanted to be in a position here prior to earnings, do that. But just remember, news, whatever that news is, can trump any technical indicator. So even though it looks like it's bouncing off support here right now, whatever the news might be, if it's negative news, definitely could change that. Also, could be good news, right? It could make a nice bounce, maybe go past yesterday's candle and head up to where that longer term resistance is sitting in around, 580 or so. All right. Looks like you're just talking about the event that took place this weekend in Dallas. Looks like several of you took advantage of that. Glad that you did. Oh, it wasn't in Dallas? Let's see. Okay. Yeah. Okay. Yeah. It really was near Dallas. So glad that some of you were able to attend that. All right. Let's do this. Let's take a look at some of the positions we want to monitor before getting into some new trades. Somebody had mentioned at the top of the hour, yeah, what about Crocs? That was a nice trade. So Crocs was a trade that was put on in the Friday class, a long call vertical, had a nice gap up today and continued to move. And it was actually pretty early this morning that it took us out of the trade here. So if we go to our account statement and look at Crocs, we paid $220 on that net debit. And this morning it got out 4 minutes after the market opened. Went up, had that gap up, ran a little bit, went ahead, took out the profit target we had in mind here. Let's see what it was really set for. We got paid $3.50. Looks like we said, if you can fill us at $3.45 or better, fill us. Gave us a nickel better. We don't feel bad about something like that, do we? So we put in a profit target. We said we'd be happy if we made this amount. So 220 minus 350 looks like what, about 130 on a couple of contracts. So a quick 260. Those types of gains can really especially when they have a quick turnaround, although not guaranteed to do that. This one happened to be, but that can really help you build up a smaller account, just taking little gains, let them just build the pot a little bit higher. Okay. Let's see the other one I was thinking of. Couple that we actually want to talk about. Irene, I call this Irene. Maybe it's Iran. Looks like a short put vertical here. Looks like you got into the trade July 20th. So it's been around for a little bit of time. Let's go take a quick look at the chart. So here's the date that we got into the trade. And let me just go back here for a minute. We brought in a 51-cent credit. So far, it's melted down to about 29 cents, almost 30. So it's moving the right direction, but sometimes these are trades of patience. And so as we look at the chart here, it's actually gone down, kind of moved up a little bit. Today's move has it probably pretty similar to the day when the trade was entered into. And so really the profit in that trade has been because of the pullback and the time decay. Now we're expecting it to continue to go up. And if this continues to rally here, then we'll see profits, or I should say maybe the price of the option getting a little bit lower, a little bit lower. That's exactly what we want to have happen. And this one looks like there is an order out there, so a profit target. If it should get to it, great. All right. Right now, let's see what that's set for. On Irene, we're looking to get out at a 10-cent debit. Right now, it's at like that 30 cents that we saw. So it's going the right direction. We're just going to let it work. Other thing that I looked at here were a couple of covered call situations here. Now, neither of these stocks have a covered call on it right now. It looks like probably because it's saying here buy right covered calls, that the position you sold a call to get into it. And that one is no longer in play. So then what do we do with those? What do we do with those stocks? Well, we wait for some decent timing when it seems like it might be a good time to sell the call. Now, when we get into it initially with a buy right, we might do it at support. We might do it maybe midway between support and resistance. Okay, we're not so finicky on that end. But now that we're looking at it and we're done with that initial short call, do you want to sell it closer to resistance or closer to support? What do you think? Go ahead and chat that in. Do you want to set it up and execute selling a call when it's closer to support or to resistance? Let's take a look at this first one here. We're going to take a look at AAL. And you can see the kind of different timing of when some different trades have gone in. And right now, it looks like it had an earnings report, had some decent news at earnings. It's been taking a little while to react, but definitely is doing so. What do you guys think? Okay, Jim says closer to resistance. CB says, and Bogus as well, say, yeah, we want to do that maybe when we're closer to resistance. And why is that? Because we'd like to sell it at a peak and have it maybe drop so that we can start collecting in and locking in the gains on that short call, as opposed to having it go against us because it's still running up and the call goes up in its value. Now, this is interesting. Earlier today, this was stronger. You can see this little shadow here to the top side. It's looking like we're losing, well, not looking like, but we have lost some value in that. This candle by the end of the day might be a weaker candle. Let's look at KeyBank here as well. KeyBank has actually lost a little bit more than AAL. In fact, we've got two, I'm going to call them weaker candles that look like the stock is running out of steam. Now, the other thing I looked at, I said, well, is this a resistance area? And it looks like it could be, right? We had some resistance through this period of time in June where the stocks couldn't get above 22, 23. And then what's it doing right now? Yeah, maybe it could be running into that resistance. Because that's kind of what the technicals look like right now. Maybe it's going to be a little bit weaker. We can see on the relative strength that right now is performing a little bit weaker than the overall SPX. So now might be a good time to sell a call. So we're going to. CB says, well, what would the range be as you consider selling the call? The range would be kind of saying, well, we know it's not clear up here at this resistance, but just seeing some resistance along in this area here is what we're looking at to go, okay, maybe that warrants selling a call. Now, it's not guaranteed it's going to continue to drop, but the two most recent candles are showing that it's running out of steam, having a hard time getting above that $23 area again. Now, as we look at the different options available for Key, it doesn't have weekly, it only has monthlies. 18 days is a little bit short of time, and it might be a little higher delta than some might be comfortable with of 41. We're not going to sell the August option. Oops. Let's get our chain back here, but let's look at the September options. That is in a little bit more of the longer window between the 20 to 40 days, sometimes 50 days we go out to sell options. But let's look at this. Look at the nice open interest that we see out here in September. So we've got a 26 delta, we've got a 44 delta. 44 delta pays us a little bit better than, say, the 26 delta. We're going to see if maybe we can get the midpoint here. If the stock does indeed run up to and beyond, let's see, is that 24? No, that's 23. That's where it's having some resistance about 23. If it goes beyond it, then it does. But right now it's got about what, $1.40 leeway before the price of the stock would even get up to that strike price. So ideally here, what we'd do would sell the call. Maybe the stock goes sideways and the time value decays, locking in whatever that profit is that we sell. Maybe it comes back here when it looks like maybe it's going to bounce again, maybe down a support, then we'd go buy the call back. So we could be very active with this call. Let's go ahead. We're going to select on that 55 price. Let's see if we can get it at the midpoint. Some of you will not be comfortable with this one because it is fairly close. You know, it's a 44 delta. But some of you might not be happy with the payment we might receive by going to the 24 because that delta is so low. So let's try to get our 60 cents here. We'll see if it happens. How many contracts? We have 200 shares here, so we're going to make this be 2 contracts. All right. So the cost basis is around 23. Yeah, it is 23.12 is the cost, is what the trade price was when you guys got into this trade. Very good. All right, let's send this over and we're going to put this in our buy right covered calls bucket. Send it off. Okay, hey, we got filled on that at 61 cents. We got a little bit more. Now, keep in mind here, had we gone out to the further out delta, maybe we could have got it at 30 cents because it gave us a midpoint here on this one. But if we come down here, notice it's just quite a bit lower. So what if we even got 50% of that 30 of that 61 cents and got in, say we were able to lock in 30 cents of the 60, we'd still be better off doing that one possibly than this one. Okay, so we'll see how that plays out. Kevin says, should we maintain the stop, sell the covered call stock in case of support breaking? As we look at the technicals of Key, if it does have a trend reversal, yeah, we'd probably want to go buy back the call. At that point, it's probably cheaper to buy back, and then would want to sell the stock. So if it were to come down into this range where the stop loss is, yeah, you probably want to buy that call back, and then you might consider selling the stock. You could either let it hit this one naturally, or decide to take it out early on your own. Okay. Cecil says, not comfortable. You don't have to be comfortable, Cecil. Yeah, we're each going to feel a little bit different about this. All right. AAL, however, it might need to show a little bit more weakness. And if it does by the end of the day, maybe you feel comfortable selling a call on it. All right. Let's look for some new opportunities. You can see over here in the left-hand area that I have the S&P 500 sector indices public watch list pulled out. And Barb keeps in these columns basically a 1-month return. What that really is saying is 4 weeks. So a 1-month return here and a 3-month return here. So we can see, what sectors are performing the best right now. And so I just sorted it by the 1 month. It looks like energy is the best performing one. And the one that's next is quite a ways down there, consumer discretionary, followed by communication services, then financials. The other sectors, at least right now, are negative in the last month. So it would be nice if we could find opportunities that are setting up in the stronger sectors right now. Now we have another little watch list that we can use in this class called liquid stocks. And this might have been one that I did with you guys a few weeks ago. Where did he? Oh, I've got to get on my personal one. There we go. Here's our liquid stocks. I think it was back June 11th that we had a class together and we went through the process of creating this watch list together. Now, right here, this description is saying what the stock is here. But if I come over here and change this and put sector, then we can be cognizant of the different sectors that we're working with. We'll get rid of the description there. All right, so we have an idea. Let's kind of widen this out a bit, see if we can see what sector they are in, and see if we can't identify those that are in those stronger sectors. All right, first one up, we're going to look at, might be down here a little bit on the list, COF, which is what? Capital One Financial. Now, do you remember the financial stocks were in a better territory? Yeah, they were. They were in a better territory. Now, what does it look like this stock might be giving us an entry for today? What kind of an entry does that look like? If you're looking at the resistance area here around 210, you might be thinking, kind of looks like a breakout entry, right? A breakout above resistance. The day is still kind of early. We would love to see it break out on above average volume. That would be maybe give us an idea that institutions and others were also buying into this. So it would be ideal to see it happen. We're not going to know until the end of the day if that's the case or not. Because we're not going to be together at the end of the day, we're going to go ahead and proceed with the trend and assume that it is a valid breakout. Okay. And if this were a dinky candle, meaning just barely above the resistance, we might not feel as confident in it. But it is a pretty decent sized candle showing the momentum today. And that's especially pertinent because so many stocks popped up early and have been pulling back, kind of like what we were seeing with Key Corp. That stock, right? It popped up and then it was fading away. And I saw that in quite a few stocks in here. All right. Thank you, Kevin, for posting the playlist there. So if you want to go back and see any of the previous classes. Chris says, actually, there was an iron condor on COF that you guys had. Is that trade over? Must be, because there's nothing out here in the iron condors grouping. But it sounds like you've had some success with it in the past. Is it all right to go back to the well and draw from that stock again? Absolutely. And this would have been a good candidate for a sideways trending stock to maybe take advantage of doing both a short call vertical and a short put vertical as it was going sideways there. All right, let's look at what we might be doing here. Now, at the beginning of class, I said, do you have an idea if it looks like maybe stocks are going to be making a big move or a small move? And some things that could help us out with that. So here's Capital One on the watch list. So for the last month, it's up 5%. In the last quarter, about 12, almost 13%. So I would look at those numbers and I'd say, well, they're not as big as maybe some others, right? But 12% in the quarter isn't bad. If you annualize that, that would be a stock up in the neighborhood of 48, almost 50% on the year. Not that it's guaranteed to do that or that it's going to stay on pace for that, but that's I'm going to say a decent size move compared to a stock that maybe you take, maybe this number here is a lot smaller, like, oh, I was trying to see a real dinky one, but the other ones I'm seeing that are dinky are losses here. But, say it were like, say, 3% in the quarter. I do not think it's being such a big mover. The other thing I like to look at here is where is it in relationship to the 10-period moving average? Is it bouncing off of it? Is it breaking down through it? What's going on? And it's interesting, this stock has honored and bounced off that 10 quite a bit. And so that might also give us another clue that maybe it could be a little bit bigger mover. So with that in mind, we're going to do a trade that's maybe a little bit more directional as opposed to a vertical that could go sideways. So as we come over here to the trade tab, we could see this one does have some weeklies. I will tell you though, the weeklies are not that liquid right now. There's not a lot of open interest in them. And so our main choices are between August 21 or September 18. On this particular one, we're going to go with a long call vertical. And where is it right now? 215 and some change. We're going to go with 215. We're going to spread it out a little bit. We're going to go to 220 for a $5 wide. Look how nice that open interest is there. 1,700 contracts, 129 contracts there. So not too bad. A little bit more comfortable, say, than doing this one with 24 contracts, even though there's 7 in volume here today. All right, so let's go here. Let's say buy vertical. It doesn't know what we want to do with the strike price, so we're just going to change that to 220. And looks like on that $5 widespread, 220 is what the cost would be to get into it. So we would be risking 220 to make what? Well, $5 minus 220. Yeah, that's going to be, what's that going to be? 280, right? So risking 220 to make 280. That's pretty decent. What does the stock need to do? Well, it needs to go past 220. Where's 220? 220 is up here. So we are saying, yep, you've got to move and you don't have a ton of time to do it. Okay. But because it has been moving fairly decent, we're going to do it that way. All right. How many contracts can we do here? We only want to risk $400 to $500 per trade. So that'll put us in at 2 contracts. And then let's go put in a profit target here. We'll put in to create an opposite order so we can decide when we get a profit target here. Now in this class, what is one that you guys frequently use as far as, hey, if we get 50% of the gain, 60%, 70, 80, what is a common percentage that you guys do in this class? I'm going to guess, I'm going to let you answer the question here. If we were going to look at this and say, what if we got, so our 5 minus 220, we already said is going to be about 280. If we were to do 50%, that's what you guys are chatting in here, times 0.5, that'd be $1.10 or $1.40 rather. Okay. Let's add $1.40 to 220. Say, would be happy to get out at 360. All right. We're going to go with the 50%. Looks like maybe sometimes you do 70%. Lakshmi says maybe 60%. Yeah, you as the trader get to decide where your comfort level is, right? And if you didn't feel comfortable at 50%, you'd put in whatever percent you're comfortable at. On this one, let's go ahead. Let's get in at that 360, I think is what that ended up being. and would be happy to take profits there. Now, it would be 50% of a nice chunk, a chunk that's even bigger than our net debit. All right, we like this. Well, we like the setup here. We'll see how it plays out for us. Hopefully it will play out well. And we're going to put this in, I think there's a long verticals bucket here. Long call verticals, there we go. All right, so we'll hope to get filled on that. Carol says maybe 25% on a bull call. That is essentially what this is, right? I'll try to use the terminology that keeps it consistent, which is long call vertical, but you will hear it referred to as a bull call spread as well. And Carol, on this one, maybe that's what your preference is maybe you like saying 25% on it. You're happy with 25% of the gain. Not a problem with that whatsoever. Reggie says, was this written plan for profit? What was the written plan for profit? Not sure necessarily what you mean by that. When the value of that spread gets to that profit point of 360, when it's worth that amount, we're just saying we want to be out. Now, that doesn't mean that maybe it has hit, up here at 240. Okay, it doesn't necessarily mean that, but we are looking for it to get above our short leg. Let's see if that filled yet. Our short leg here's going to be the 220. We want it to move that far. Right now it's sitting at 215. It hasn't filled yet. We'll have to take a look at that. If it doesn't fill by the time our class is over, I'll go back and change that so that we make sure to get filled on it. All right. Next up, let's take a look at another stock here that is in an industry group or a sector that's performing positively right now. Let's take a look at Blackstone. Let's see if this still looks like a nice bounce entry. And it does. Earnings is out of the way. Looks like they had a fairly nice earnings. They ran up, kind of came back again to this 10-period moving average. Looks today like it's making a real nice bounce off that 10 period. And if we go find BX, let's see where it gets highlighted here. Oh, it's right. No, that's Walmart. Where did BX go? It was here on the list earlier. I hope I didn't accidentally delete it. Let's sort this alphabetically. There's our BX. Here we go. So in the last month, it's up 6.63%. Over the quarter, only about 4%. Okay. If I kind of zoom out here a little bit, you might look at that and go, yeah, it is kind of not really making big moves. Even though, yes, it's bouncing off the 10 right here, the 10 has been kind of sideways since April. So maybe this might be the kind of trade that we don't expect a larger move from. Maybe this is a stock we maybe expect a smaller move from, at least right now. And then if it breaks out of this sideways channel, then maybe you decide to do more aggressive trades where you require movement. In this case, let's just do a short put vertical on it where we're not going to require it to move a whole lot. In fact, we're just going to want it to stay above a certain area. Now, as we come over here to the trade tab on Blackstone, it does have some weeklies. On this one, I think I was looking at this, still doing the August 21 options. It's at the shorter range. In fact, it's a little bit shorter of the range that we typically look for, 20 to 40 to 50 days. It's 18 days. But if you think you can get a move out of the stock, great, go ahead and do it. Okay, if you think that the trade has time to do it. And if it meets your profit target that you like to look for. Now, typically we'll look for a 30-something delta here. On this one, see if this still makes sense. I was looking at doing 125, 123. So here's our 125, 123 up there. It's moved a little bit higher than it was when I was looking at it initially, but let's see if that gives us a good enough credit. Okay, let's go 125. Let's go ahead and say sell vertical. And then let's move this out. We're going to make that to 123 here. All right, and I'm going to lock this in 52 cents. How decent is 52 cents on a $2 widespread? Is that a decent enough return? Let's check it out. If 52 is our max gain, our max theoretical loss in this case is going to be what? $1.48, right? $2 minus 52 is $1.48. I suppose it's a 35% return in 18 days. That might meet some of your rules. There might be some people that don't feel comfortable with that. That's okay. Or maybe you would feel more comfortable going out to September. Some people will look for like a percentage a day. Well, it easily is giving us a percentage of a day, given that we only have 18 days. What was that percentage? 35. Okay, so we're going to go ahead. We're going to do it this way. So knowing that we would be risking $1.42, how many contracts can we do? Or $1.48? Let's take 500 divided by 148. Oops, too many numbers. There we go. That's not right. Let's try it again here. 0.52 divided by 1.48 would be a 35% return. Okay, so we figured that. And then 5,000, I kind of repeated that step. 500 is our max theoretical loss. Divide that by 148. There we go, 3 contracts. That came up earlier and my brain was still on the other calculation. So we're going to go ahead, we're going to do 3. And we're going to do the same thing. We're going to put in a profit target. If we get whatever that chunk is and we're happy with it, yeah, we're going to be happy campers. So let's go ahead. Let's create an opposite order here. Now on debit spreads, you were getting out at about 50%. Some of you said 60 and 70. The majority of you were 50% people. What about on a short vertical trade? Is there a value that you're comfortable with then? Is it the same thing, right? Are you trying to get 50% out of it? You might be. I don't know for sure, okay? But if we get 50% of our 52 cents, that's going to leave us with what, 26 cents. So we're going to say, okay, if you get down to 26 cents there, go buy back. We're going to be happy with 3 contracts getting 26 cents, which is 26 bucks, which would be about $75, and would make this good till canceled. So some of you are saying 20%, 52. Oh, it's still 52%. I meant 50%. Juan says 30%. Sharon had said 35%. Carol Leland is 35%. So it could vary a little bit, right? Could vary. Since I stuck in 50% on this one, we'll just continue with the 50%, but knowing it could be a little bit different. Bogus says something about OP and IV on $5 increments. All right, we're going to go with 50%. We're going to send this off. What kind of bucket do we have for that? We've got some, let's see here. Do we have a short vertical? There we go. We're going to pop it into that bucket. Hopefully we get filled on that pretty quick as well. I think we have time for one more trade here. I've got several, but we're going to look at. Let's just see what the graph looks like on this particular stock. All right, let's move out a little bit. This is Verizon. What technically has been happening with Verizon? Well, had some decent earnings, broke out and beyond this diagonal resistance that it had been trading in. That's a really nice bullish thing. Put in a higher high. Pull back here. It did go into under the resistance a little bit, but it's bouncing here off the 30-period moving average. And it's again now above that diagonal resistance. Okay, so we're like, okay, some people might view this more as a bullish setup, right? We've got a higher high, a higher low. It's above the diagonal resistance. And that should act as support for the stock going forward. Now it is losing a little bit of its oomph today, right? It was up higher, but it still is keeping that gap, which is a nice bullish signal. Now, as far as what kind of reviews do we see on this? So in the month, it's up 11%. Over the quarter, it's actually down 1.26%. And you can see here, yeah, it had been trending down. So yeah, we would probably expect something a little bit negative because of what happened not only this month, but also the previous 2 months that have been going down. However, on this one, I think we could go even a little bit more aggressive if we wanted. I could see it going either way, short put vertical or short call, or short put vertical or long call vertical. Let's come over here to the trade tab. This one, the price of the stock is a little bit lower, which is nice. But we're going to come out to the September options here. It needs just a little bit more time for the types of deltas we might want on this one. We're going to do, on this one, we're going to do a short put vertical. Again, I was looking to do the 46.45 here. 46 is a 36 delta. And then 45 is just a little ways out there. But look at this open interest out here. Lots and lots of contracts. Although it wasn't as liquid out here in some of the weeklies, some of you might find some that you like. We're going to just go with September here. And let's do that 46.45. We're just going to say sell vertical $1 wide. Now, those of you that are working with smaller accounts, maybe you can only risk in your account, maybe you can only risk 250. And so something like this with a $1 wide spread is really desirable, right? That you could say, great, I'm going to have a 29-cent max theoretical gain for what would the max theoretical loss be here? Be like 71 cents, right? So let's calculate the return on this. So if we say 0.29 divided by 0.71 max theoretical loss, gives us about 40%. Okay, we're in it a little bit longer. That's nice that we have a little bit more reward potential there. All right, how many contracts can we do? How many contracts can we do? Well, let's take 500 divided by 71. Good, we got filled on that. Could do 7 contracts, is that right? I guess it would be 7 contracts we can do here. I'm just going to take a quick peek here. Yeah, our max loss would be 497. So it would be like just right at the border of that. Let's put in our buyback order. So let's do a first trigger sequential, trade in opposite order. And I'm going to go with one of yours from the previous question when you chatted in. What percentage you like? Sharon likes 7 to 80%. Okay, Sharon, we're going to go with your number this time. We're going to go with 70%. Okay, so 70% of 29 cents, that means 30% is left, right? So 0.29 times 0.3 says, let's go buy it back at 8 cents. I'm going to pop that in there, make it a good till cancel. And that will be set. And, oh, let's see, is there yep, we do have a short puts bucket, don't we? We'll put it in our short put verticals bucket. All right. So today we sold a covered call against a position in your buy rights. That was on KeyBank. We did 2 short put verticals, bullish trades, and 1 long call vertical on Capital One Financial, really focusing on stocks that are in the industry groups or sectors rather that are performing a little bit better here. All right. Now my time is up. I appreciate your time and attention here today. I appreciate your participation, letting me know what you're comfortable with, right? In terms of let's get out at X%, whatever that happens to be for you. Now, I hope you're following both Kevin and I on X, Kevin Horner CS, Connie Hill CS. Kevin's typed those in there again for you. If you're happy that or thought this session was useful for you today, go ahead and hit the thumbs up on the way out. And then if you haven't become a subscriber yet to our Trader Talks channel, I don't know what you're waiting for. I love the idea of subscribing to channels on YouTube because it makes it really easy to find the content, right? So in our class, Coming up next, trading with technical indicators. Some of you I know love that class with James Boyd. That's what's coming up next. Kevin taught earlier this morning, so he's not teaching again today. But you could find his recording of his session if you go in and look at the playlist. You'd be able to pull up that Trader Talks playlist and find his class from this morning, which he did a super job with. All right, you guys. Next time I will be out here teaching will be tomorrow at 1 Eastern time. We'll be going through long options at that time. I'd love to have you come along. So appreciate you being here today. Take a quick break and we'll see you back at the top of the hour. Thank you, Kevin, for your help today out here as well. Bye-bye.